Hi, this is Penny Lane. In this quick tutorial, I'm going to teach you how to relate your bottom line profit with your cash flow in one easy report. The financial report that most small business owners are the most comfortable with, and frankly the one that's the most straightforward and useful for most people, is the profit and loss report. But what about that bottom line profit or loss? What if you need to know how that relates to your cash flow? That's what I'm going to teach you in this tutorial right now. So the first thing we're going to do is run a profit and loss report, which I'm going to do by clicking Reports from the gray menu bar. From the Reports menu, I'll click Company and Financial, and from the list, I'm going to select Profit and Loss Standard. Now I'll choose a date range. I'm going to start with January 1st, 2017 through 12/31/17. Let's scroll down to the bottom and see what our bottom line profit is for this particular period. Notice that our profit for this particular period, 1/1/17 through 12/31/17, is a little over $107,000. It's great that the profit and loss report has told us that we made $107,000, but it doesn't necessarily tell us what happened to that money. For that, we need to run a balance sheet, but not just a regular balance sheet. I'm going to show you how to modify it to tell you exactly what happened to your $107,000 profit. From the Reports menu, I'm going to click Company and Financial. Next, I'll choose Balance Sheet Standard. Next, I'll click Customize Report. If you're using an older version of QuickBooks, before 2013, it'll probably say Modify Report. The first thing I'm going to do is change the date range of this balance sheet report to be the same date range as my profit and loss report. I'm going to change it to be 1/1/17 through 12/31/17. And this is really important because the balance sheet will default to be just as of one date. But to make this work, you need to do a from through date. Next, under Add Subcolumns for, I'm going to click Previous Period. For this analysis, I'm also going to click the checkbox Dollar Change. I'm finished modifying this report, so I'm going to click OK. Now we can get down to the business of analyzing. First, notice that the very first column is December 31st, 17. And the other column is the ending balance December 31st, 16. And then you have a column for the dollar amount changed. What this means is, for instance, in the company checking account, last year on December 31st, 2016, you had a little over $111,000 in your checking account. But on the very last day of this year, you only had a little over $99,000. So you actually have $12,000 less in your checking account. But check it out. You have $55,000 more in your savings account. See the next line? And so on and so forth. So total, more cash on hand that you have is $42,831.27. So great, you're going, but hey, I made $107,000. Why do I only have $43,000 more dollars? Even if you would have realized that, I can prove it to you here. You have almost $43,000 more during this time period, January through December. It has to be analyzed strictly from one time period to another. So you might say, where's the rest of the $107,000? Well, let's go on. We have to look at every part of this report to understand what happened to all of our profit. One of the situations is that as of the end of this year, people actually owe us $30,150 more than they did at the end of last year. Now, in this particular instance, we're running our profit and loss on an accrual basis, so we have this accounts receivable situation here. If you're doing it on a cash basis, you won't. But, for instance, an accrual basis is a great way to look at your accounting. So if I'm looking at this $30,000 is actually counted as income on my profit and loss report, even though I haven't received it. So I've got $30,000 more that people owe me than I had at the end of last year. And that $30,000 more is counting as profit. So I don't have the money, but it's coming. People owe it to me, so it's kind of like I have the money. Additionally, retentions receivable, which you may not be familiar with if you don't have these, but it's kind of the same thing. It's money that people owe you that's already been counted as income. So, interesting. I made $107,000 in profit, a little over that actually. And if I look at the bottom line of my total assets, I can see that even though all these assets may not actually be cash money in my hand, I do actually have over $76,000 more in assets this year than I did last year. Perfect. But that's not the whole part of the equation. To get the other side of the equation, we actually need to scroll down and look at the liabilities on our balance sheet as well, and how those might have changed. So I'm going to scroll down to the liabilities section. Now we're going to look at the liabilities section of our balance sheet. Liabilities, of course, are the opposite of assets. Assets are things you own. Liabilities are the things that you owe. Loans, payroll liabilities, credit card bills, things like that. And this is just as important as the other side of the coin, and I'll tell you why. Let's take a look at our accounts payable, for instance. At the end of December 2016, we owed almost $66,000 to our vendors. But at the end of this year, we only owed over $41,000. During this 12-month period, we actually used some of our cash. Instead of leaving it in the bank, we used some of our profit to pay down our bills. We paid a lot of those off. And as a result, accounts payable is, in a way, it's almost like borrowing from your vendors. It's kind of a loan. And so we took a big chunk of our profit and we used it to pay our bills down. Our credit cards payable, actually, in this case, it's a pretty minor amount. We owe on our credit cards a little over $200 more than we did at the end of last year. So that's the opposite. So we borrowed some of that money. And keep in mind that the accounts payable and whatever expenses we put on the credit card, those are actually recorded as expenses on our profit and loss report. So they're accounted for on the profit and loss report as expenses, and then they're sitting over here as money that we owe to people. This is a really important side of that equation. Same thing with our payroll liabilities and our workers' comp payable. We used some of our profit to pay those bills down. And same with our truck loan, we actually paid off some of our truck loan. So if we look at the total bottom line of our liabilities, we actually owe $31,000 less at the end of this year than we did at the end of last year. And what that means is that we used some of our profit to pay down our debt. This could go the other way too. And same with the assets. Things can go both ways depending on, if you borrowed money, you could actually have cash even though you had no profit. But this is where you actually see the numbers. If we take a look at this, we can see that we have taken some of our profit and used it to a little over $31,000 to pay down our debts. And the other part of our profit we have in the bank, or we made sales that people still owe us money for. We have $76,000 more in assets, plus we paid down our debt by $31,000. 76 plus 31. There's your magic number of $107,000 profit. Nothing escapes. Every transaction in QuickBooks shows up either on your profit and loss, on your balance sheet, or some transactions will show up on both. But between these two reports, there is no transaction that will escape. And that's why it's so important to understand the balance sheet and understand how to analyze it in ways like this that are truly helpful. I want to mention that if you have a sole proprietorship or a corporation where you might take out dividends or shareholders distributions, under the equity section, that might figure in to part of this equation. In this particular case, we don't have that as one of our equations. But if you actually take some of your own money and put it into your bank account, or you take distributions and you take money out of your bank account, you can see how that would also figure into the equation as far as where did the cash flow from your profit go. If you put money in, you'd have more money in the bank or more assets or so on and so forth. Or if you took it out, that would be where some of the cash from your profit went. Thanks for sticking with me. I hope that you found this tutorial helpful, and I'm glad that I didn't lose you somewhere along the way. I know this can be kind of mind-boggling, but give it a try with your own books and see if you can relate to it. If you're having trouble with your reports and they really don't seem to make sense, it could be that there are some things happening in QuickBooks that aren't quite right. That's something you've got to get straightened out first. Make sure that your books are really accurate. If you need help with any of these things, I can help you no matter where you are in the world via remote screen sharing. I do one-on-one consulting, QuickBooks training for small business owners and their bookkeepers. I act as an outsourced CFO for some companies, and I can even handle QuickBooks setup and cleanup for you. Please feel free to give me a call or send me an email. For sticking with this, I'm going to give you half off your first hour of consulting. Just mention this video when you call or email me for an appointment. And I'm always happy to just chat with you and find out what your issues are and let you know if it's something that I think I can really help you with and what the cost might be. Thanks again. And I'd love some feedback on this tutorial.